Aloha, everybody. This is Joshua Hayes here at BigWaveTrading.com coming to you with the January 5th stock market report. Today, we basically saw, I want you guys to remember, mainly I'm a weekly kind of chart kind of guy. So I really don't give a darn what really happens intraday except for by the close how it ends up looking. And the markets were down 0.47% on the 500. On the Dow Jones Industrial Average, it was down. Got to wait till points up for you. 0.91%, and on the Nasdaq, we were down 0.26%. Technically, those losses being over 0.25% each on each index, with the higher volume on today's trading session than the day before, technically gives the market a quote distribution day. However, when you have a distribution day with such a bullish intraday tail, showing that we came off the lows pretty well on the 500 Dow Jones Industrial Average, you can see a tail here at the end. And on the Nasdaq, you can not only see a tail, but a close higher than the open. And then on the S&P 600, once again, another tail. So bullish intraday session overall. And when we look from the November lows, open body candlestick patterns all in the uptrend. And when we go down, there are tails almost in every single daily price action. So the S&P 600 looks extremely bullish if you look at price alone, and the Nasdaq even looks bullish price alone. Look at all the open bars off the November lows. Very bullish. And look at all these bullish tails intraday as we bounce off the lows and then close higher from the lows. However, if we rule out this quadruple witching Friday volume, once again, what do we have? We basically have a lower volume rally still. Since the very first day of this rally, there has not been one single session during this 24% run by the Nasdaq that has come on higher volume. The one day had quadruple witching. Technically it doesn't count. I mean, it counts, but it doesn't count. So this entire rally in the Nasdaq has been on lower volume. Does that make you feel real confident? I know it doesn't make me feel confident. I look at this NYSE from November, and I'm looking at a beautiful chart. Open candlestick bodies, tails as far as the eye can see. But then I remember I use weekly charts mainly. Then I go back out to 2008, and I realize, we're still in deep crap because we're still down 41% from the top. So I guess it ain't that nice. However, short term, yes, it's looking good. I want to be bullish so bad. However, I cannot become a hardcore bull when we refuse to have any volume on the uptrend. Now, if we want to go up a little bit more right now, pull back on low volume, and then rally again on higher volume, boom, 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 we'll be getting heavily long. I just became John Madden there. But anyways, the big point is that things look a lot better. However, why am I still short all of my long-term shorts? Because I'm not getting any full cover signals. There's not one single short out of the 27 that I took before the September hard breakdown that gave me a full cover besides ATHR. And like I tell you, technically, ATHR's full cover day, the very next day turned into you shouldn't have done that. So I should still be short all 28 shorts that I took before this September 19th mark. So all the shorts I took before September 19th, I'm still holding. Didn't give any up. And recently, the shorts that I took recently, I thought we would be covering more today. None. There were no full covers. At the same time, no full sells. So now I'm up to 12 longs. Nothing major except for one. All my platinum subscribers know which one it is, and we're not going to talk about it here. And out of the shorts, I still have 32 shorts, including a new one I took today, one that I'm very familiar with. So this market's still in trouble. Short term looks good. Long term, if you're holding long term shorts, keep on holding. If you're holding on to short term longs, keep holding because the short term longs are working. One of my best longs still is ANCI. I went long here on the June breakout. Best reference point on this chart is to use the close here. Till now, 50% gain still. Doesn't have its max green bop. It isn't a beautiful chart anymore. So you all can get familiar with what I think a beautiful chart looks like. It would look like either this on your screen or look like this on your screen. Either way, that's what a perfect chart looks like. We don't have too many of those. We do have two that are close, but I ain't telling them here. Anyway, let's move off of that and go to some of the other indices. Let's look at oil. Boy, oh boy, I said that the oil was going to bottom at 40, would not go lower than 40. It did go lower, hit 35.35, 33 on the expired contract, but since then, right back up, and now we're at 48. I believe we'll be seeing 50 pretty soon. Fill up your gas tanks now if you want to. Might as well. Let's look at silver. Silver holding in there, had a nasty day at one point intraday today, but look at the huge tail. That means as soon as it comes down, buyers are rushing in to take it off its 10s to bring it back up to 11. Let's look at world platinum, holding in there beautifully. More bullish tails, more open bodies. The weekly looks very good after the sell-off. And then the last one, of course, of the metals that I love, gold. Gold had a down day today, holding at the 200-day moving average still. If we get up close, you can see it's above the 200-day moving average line, that purple line. Still in an uptrend, and I was almost going to type in some of those nice short gold charts that we're looking to get long, but wrong place. Last thing we can look at here is the DXY0, which is the United States dollar. Awesome, baby, and that's what you like to see. Now, even though I believe, personally, which I don't, who cares if it happens because I'm not trading off this information. I use my charts. I just showed you what I consider beautiful charts and how that beautiful chart has with me right now a 50% gain from June. So it's about almost 6+ months. Actually, it's 1, 2, 3, 4, 5, 6. 6 months and 2 weeks that I've been long, technically, ANCI. And the major buy, by the way, on ANCI was this move, and sadly, that only is a 14% gain. But still, the bottom line is, one more time before we go back to the dollar, I want you guys to show you what a perfect chart is. I wait till I have these everywhere. When these are everywhere, and I can just find these left and right and move from one beautiful stock to the next in these max green bops, huge accumulation, nice pattern charts, then I'm good. When I can't, I can't. Right now, I can't. Like I said, let's go back to the dollar again. DXY0. Get updated. And as you can see here, when it fell to the 200-day moving average, gave everybody a scare. The dollar runs over. Here it comes. Here comes the great collapse. But I said not below till it closed below the 200-day moving average. Excellent bounce, very bullish, open candle bar with the bullish tail, continuation of that, and it started to look like it was getting weak again, but on 12/29 had a very bullish daily pattern with this big tail, closed higher than the open, and then it continued to build another tail, and then had an open body, and then a tail with another open body, and then boom, today's 1.09% gain. We're not safely out of the water yet for the United States dollar, but bottom line, it's looking a lot better than even gold out there. I mean, let's say if you would listen to everybody when the market was falling apart in September and you would have actually have gone long the dollar, you would have a 3% gain. But let's say if you listen to everybody and you went long gold in September, and let's even say that you got it at the bottom, you have a 14% gain. So which one's better? Gold is, but most people told you, sadly, to buy gold here. And had you done that, you now only have a 3% gain. But had you bought the United States dollar when everybody told you it was stupid to buy it, you now have an 8% gain. And I know it's minuscule, but the point is, the crowd is almost always wrong. I'm not the crowd. This is Joshua Hayes of BigWaveTrading.com. We're coming back with part 2, and we're looking at our 2 new longs, our 1 new short, and the long we're going to add on. Can you believe that we actually have 4 positions to take tomorrow morning? Awesome. Let's try to make some money. Remember, cash is still king as long as we have low volume. Until we reverse at the 200-day moving average on strong volume or start to rally on strong volume, there is nothing to do on 200, 400%, or even 100% full margin on the 200, 400 and fully positioned at the 100%. So stay calm, be patient, wait for these beautiful charts to set up. And for you guys that are going to about ready to watch part 2, you're going to finally start to see what I want to see in stocks before they break out. Got 2 new longs, 1 to add to, and 2 that are setting up. That's 5 stocks you're about to see to know what I want before I go long. Aloha, everybody. Have a wonderful night, and I'll see you tomorrow.